thanks to all of you for being here this evening. It's great to be back in person, presenting, marketing. I'm going to jump right into the presentation. So Skeena is an exploration development company. We are based out of Vancouver, British Columbia, listed on both the New York and Toronto stock exchanges under ticker SKE, as well as the Frankfurt Stock Exchange under ticker RXF. Our main focus is the development of Eskay Creek. Some obligatory forward-looking statements, and just jumping right into the presentation. Skeena currently has two assets, Eskay Creek and Snip. Both are high-grade, past-producing mines that are located in the Golden Triangle of Northwest British Columbia. Snip is an epithermal vein deposit. We currently have a resource out on the project. It's about 646,000 ounces at 13.5 grams per ton gold. Hochschild Mining, which is a Peruvian mining company, has an option to earn into 60% of this asset by spending $100 million. So Skeena's taken a step back from doing work at Snip this year, and our focus again is really Eskay Creek. Eskay Creek is in the pre-feasibility study stage. We're aggressively advancing it towards production, and we're set to release a feasibility study in June of this year. Moving on to our board of directors and management team. Skeena's been around since the 1970s, but Walter Coles, our CEO, came in 2013 and rebranded the company from there. So within the last 6 years, everybody you see on this slide has come into the company. When Walt came on board, he started looking for brownfield assets, which just means assets with a known resource or deposit on them. And that's when we came to option and later acquire both Eskay Creek and Snip. I'm also going to highlight a few other key team members that are crucial as we continue to develop Eskay Creek. So Randy Reichert, he's our president. He joined the team on the management side about a month ago. So Randy previously was the VP of operations at B2 Gold. So we're really excited to have him as part of the team as we're developing Eskay Creek, as he has a rich history of bringing mines online, on time, and on budget. Shane Williams, our Chief Operating Officer. Shane came to us from Eldorado Gold, the Lamaque project. He took it from PEA to production in 18 months. Going to jump over to Paul Geddes, our Senior Vice President of Exploration and Resource Development. Paul came to us from the Osisko Group of Companies, Barkerville. Prior to that, he was with Rainy River. And then Craig Perry's our chairman. A lot of you probably know Craig. He's been involved in numerous successful development stories, most notably co-founder of NextGen Energy, which is a successful development story out of the Athabasca Basin in Saskatchewan. So one of the reasons Skeena was so keen to get into the Golden Triangle was because of the vast improvements in infrastructure in the area. So as I mentioned, both projects are past producing mines. So since the mines were in production, there's been over $2 billion worth of infrastructure put into the area. And as you can imagine, that significantly changes the economics of the projects. So since both Eskay Creek were in production, there's been Highway 37, which is it's been paved all the way up to Newcrest Red Chris mine. And then the key development in the infrastructure of these 3 hydroelectric facilities, which you can see in blue. So to put this in perspective, historically when Eskay Creek was in production, we've been told that up to 50% of the operating costs were due to power, diesel and propane power. And now Skeena will tag into this hydroelectric facility, which will cost for about 5 to 10% of the operating costs. The other thing for existing shareholders in the room, you likely saw the announcement that we'll be acquiring Questex Copper and Gold. So that's set to close in early June. With that, we will be acquiring KSP and Kingpin, which you can see it's going to increase our land package by 7 times. If you're unfamiliar with Eskay Creek, it was the highest grade gold mine in the world when it was in production. So it produced from 1994 to 2008, 3.3 million ounces of gold and 160 million ounces of silver at an average grade of 45 grams per ton gold and over 2,000 grams per ton silver. So extremely high grades for today's standards. And to the right side of the screen, you'll see the cutoff grades. So the cutoff grades when Eskay Creek was in production were 15 to 30 grams per ton. And this is because it was extremely expensive to operate, but also commodity prices at the time were quite low. So you compare that, Skeena's thesis coming in was quite simple. What did the previous operators leave behind that wasn't economic at the time, but is today, given the improved infrastructure as well as the increase in commodity prices? And the other flip to that is that historically Eskay Creek was an underground mine, and now Skeena's looking at it from an open pit perspective. So our current resources at Eskay Creek are 5.6 million ounces at 4 grams per ton gold equivalent. We're pushing the project forward as an open pit. As you can see from this slide, there is a small component to our resource that's in the underground category. We'll look to add that in later in the mine life. The resources converted 76% into reserves. So our current reserve statement at Eskay Creek is 3.88 million ounces at 4.57 grams per ton gold equivalent. So historically, Eskay Creek was the highest grade underground gold mine in the world. And now Skeena's looking at bringing it back online as one of the highest grade open pit mines in the world. And the other thing I'd like to mention here is that up until this year, we've been very focused on getting the economic studies out. So 2022 is really the first year that we're focused on exploration. So we have 60,000 meters of drilling planned for 2022. Moving into our pre-feasibility study, this was released in July of 2021. You can see our PFS base case was done at $1,550 gold and $22 silver. Extremely robust project. $1.4 billion after-tax NPV at a 5% discount, a 56% after-tax IRR, and a 1.4-year payback. This highlights 350,000 ounces on a life of mine annual production. Again, open pit grade at 4.57, all-in sustaining costs extremely low, $548 an ounce. 10-year mine life, and a capex of $381 million. So we are expecting to release our Bankable Feasibility Study in June. The changes here that you can expect to see, our average annual production will increase to closer to 400,000 ounces. With that, our mine life will decrease to 8 years. And the reason for that is because, again, we see a clear pathway to growing the resource later in the mine life. Capex will increase. We're expecting 20 to 25% increase on our capex, but still very modest. It'll be around 500 million US. Briefly, a project layout that was highlighted in our pre-feasibility study. Key thing I want to highlight here is that because it's a brownfield site, we have a number of existing permits. The key permit that we do have is the tailings storage facility. So in Canada, and specifically British Columbia, one of the hardest things to permit is the tailings facility, and we have an existing permitted tailings storage facility already on site with ample storage capacity. Moving into exploration upside potentials, we have 60,000 meters planned in 2022. That's fully funded. There's a few key areas that we're going to target. So the first area is open pit targets. So we did some drilling late last year and had some significant successes. So we found a new 23 zone, which is 200 meters east into this section. Near surface open pit ounces, quite continuous. And the other area we had some success is actually within the existing pit. So with that, we're able to convert some waste to ore. And then the second part of our exploration drilling is going to focus on underground targets. So Eskay Creek is a VMS deposit. It comes in stacked sequences. Historically, the contact mudstone, which is highlighted on your left on the screen, that's what carried the 45 gram per ton material. And then you can see the lower mudstone units at depth. So in 2019, when we were doing infill drilling, we let some drill holes go into the deeper zones, and we tagged in some pretty great results. So this is highlighted here, 300 grams over 2.2 meters. So we really want to follow up on this drill hole, but also others. with some deeper drilling at Eskay Creek because it's been somewhat untapped. Barrick historically drilled a few holes deeper, but they didn't hit the grades they wanted to, so they moved on. And then the other area is the contact mudstone at depth. Again, that was also not explored, so that's what carried the 45 gram per ton material. So we're going to explore the northern extent of that down dip. And then just into a cross section here. So unlike other epithermal vein deposit, Eskay Creek is a VMS deposit. It's quite continuous when we see mineralization. So the top of this cross section highlights that from some of the infill drilling we've done. So as you can see, 6 grams per ton over 34 meters, 25 grams per ton over 35 meters, and 11 grams per ton over 40 meters. When we let these drill holes go deeper, again, this highlights the 300 gram per ton hit, but also 12 grams per ton over 6 meters and 6 grams per ton over 4.2 meters in the lower mudstone units. We will continue to explore this in 2022. This highlights Eskay Creek among other top Canadian open pit producers. So currently Eskay Creek sits fourth with 352,000 ounces. With our feasibility study, we're looking to move ahead of Millionen. And then the bottom chart highlights the open pit average grade. The worldwide open pit average grade is currently 1.5, and Eskay Creek is sitting at 3 times that at 4.6 grams per ton gold equivalent. As our CEO always says, grade is king. Grade puts mines into production. Recently, Pretium was acquired by Newcrest, which included their Brucejack asset. So they were acquired for $3.5 billion. This project is right next door to Eskay Creek, and there's some striking similarities that I want to highlight. So both projects have about 3.9 million ounces of reserves. The annual production on both projects is about 350,000 ounces. Their current market, or their valuation when they were bought out was $3.5 billion, and Skeena's current market valuation is around $700 million. So as we further de-risk the project, that's where we're looking to grow. Eskay Creek, by the nature of the deposit, it being high grade and Skeena having access to hydroelectric power, it is projected to be one of the lowest GHG emission gold mines worldwide. Open pit average is 0.7, underground average is 0.36, and Eskay Creek is sitting at a 0.18 tons of carbon dioxide emissions per ounce of gold equivalent. Moving into the Eskay Creek project timeline. So again, as I mentioned, we're doing 60,000 meters of exploration drilling in 2022. That's fully funded. In June, we will release our feasibility study. And prior to that, we're going to release a permitting process charter. And what that is it will be a timeline of all the permits and signed off on by the Tahltan, which is our First Nation partners, the government and all its agencies, and Skeena on the timeline to production. And that's for us to further de-risk the project. In fall, our impact benefits agreement will be released with our Tahltan partners. And then in Q4 of this year, we'll be launching project financing. So we have about 15 groups in the data room right now doing due diligence so that when we release our feasibility study, we can launch into project financing discussions. The Tahltan are our First Nations partners on the project. We're very proud of the relationship that we've built with them over the last 8 years. They made an equity investment into the company of $5 million, so they are partners as we're pushing Eskay Creek forward. We're also giving them consent over the Eskay Creek project, so they have a seat at the table when we're going through all of the permitting, the environmental assessment process, and we're really proud of that initiative. And we're also hopeful that it will expedite the permitting process. We also returned some mineral tenures last year. They were adjacent to a mountain that the Tahltan considered sacred to create a nature conservancy in collaboration with some NGOs in the province. And then lastly, our capital structure. So we currently have 69 million shares outstanding. As you can see, analyst coverage, we're covered significantly by numerous groups. Our target price right now is around $21.50 on average. And then our share price chart over the last 2 years. And that concludes my presentation.